Welcome to the Trading Lounge and the day ahead report. There's not a lot to report today as the FOMC Fed's meeting tonight at 4 a.m. Will deliver any direction within the market. So the markets are sitting quiet for that period of time. As you can see here on the S&P 500, the 4-hour chart here, we're in wave 5 at the moment, and that could certainly push higher through the 144, which is a 72 number, which in turn is part of the 9 series of numbers. But we are expecting that to push up, but at the same time it will give us that 5th wave to the upside. So we'd see a correction after that occurring there, and obviously the Dow Jones is the same. In fact, most markets, the European markets, are much the same as well. The 5 waves here, nice strong 3rd wave here, the 4th and the 5th here for the FTSE here. So, as I mentioned before with the FTSE, unless the 5/8 becomes the support, then there's no point in going long here because it can fail at this point. And obviously the group 2 here, the next level down, is important, and then within that group the 72 is the most important number there. So if you're setting trades up, then you would be long above the 72 and with the stop under the subgroup 2 area. The Australian market here, when we look at this, I'll just go to the daily chart here. This is the daily chart here, the cash market, the XJO. When we're looking at this, we're looking at this being a 4th wave here, and once the 4th wave is finished, then we're looking for a move up. Now, with the 4th wave here, I'm just not sure if we're going to get a move like this. This would be the ABC correction. That's what I'm not sure about. Okay, so but once that's finished there, then we would see a move to the upside and be looking somewhere up here, and there is the possibility that it can push up from here as well. It just depends on how we count it, because when I look at this market, when I look at this move here, it looks like it's got down in 5 waves here. That's why I would be looking for this particular one here in an A and a B and a C here. But if it pushes up through here, then if we look at this market here, this is the futures market here, we can see that it does count quite nicely in 5 waves, in 3 waves, in terms of an A, B, C down here for the A wave, an A and a B and a C for the B wave, and a C wave here. So I've still labelled it A here, but it could certainly be wave 4 here. So as this pushes up here, then it gives us a bit of bias each time. We know that we've got support on top of group 1, which is the 30, and the next level up is the 43.50. So it's made its first high above here this time. It's come back in checking it this time. It tried to do it over here, but it couldn't find the support. So it's just checking it now. If it finds support, then we can trade to the upside with the view of adding at 43.72 and also on 43.80, and the idea would be to hold it at that stage and look to add above the 44 there, because we'd want to be going higher than that, but it'll get pretty wild all up through here. But it is struggling at this, this group 2 area here. There is plenty of sort of resistance supply in here, but we also have good support within here as well in the 30 and developing at the 50 here. So it is developing here quite nicely. So it is a point that we can move into. It's just that the Fed's meeting is going to sort of rock the boat a little bit and create spikes, perhaps. I'm not sure. We don't know what they're going to say. So yes, so a little bit unsure about all of this. We know that it's a corrective pattern at this stage. We just don't know how wide it's going to get. Okay, let's have a look at the commodities. Okay, just having a look at the US dollar quickly, and we'll look at this more so in the Forex section, but just as you know, we've been tracking this little sequence down through here in terms of the 1, the 2, the 3, the 4 and the 5, and we can pretty much count 5 waves in here now as well. So that would put an end to this particular sequence through here, so then we can expect a larger retest back into the 80 there. So if that does retest back into the 80 there from the 79.50, then you need to be careful in trading commodities at that time, because the commodities will sink back as this moves up through here. So the the 79.72 here, if the support comes in at 79.72, then it's going to put pressure on the commodities, be it gold, silver, oil, copper, and so forth. So looking at the gold market here, that we had a bit of a spike, this 4-hour chart, we had a bit of a spike down through here, which really sinks in that top of wave 3 here, and there's a couple of different ways to count this, but I was looking at from the 1650 here, the medium level here, looking at this as wave 1 here and wave 2 here, and then wave 3 would be the 1, 2, 3, 4, 5 for the wave 3, and coming back 38.2 would bring it back into 1720 there. The other important point here, as we were talking about the other day, is that this is 1700 here, so we've got 10, 20, and 30 here, top of group 1. So if support is found on top of group 1, because we've got that sharp move there, we could expect a bit more to come of that. But if the 1720 holds the support and finds support back up on the 1730, then we can expect to move up to the 1772. Now the 1772 will carry a lot more weight because of the 772. The distance of wave 1 here would be the same distance as wave 5 in this case here. Do I have a smaller chart here? Yes. So, okay, so this is just a 1-hour chart here. So we see this pretty sharp move down through here. So we need to be a little bit diligent about that. If we get like a sharp move down through here, then we've got like a 5 waves down through here. Then we'd see a move back up, and then we'd see a move back down as well. So just you need to protect any sort of positions at that stage there. The copper market, the other base metals, it's also looking at there's obviously a relationship between the base metals and precious metals, and once again would also be looking for a short-term top in here as well. Any move back through here would come back into the 38.2 retracement level, which is the 360 here. But a lot of the times that the market will the price will just stay within group 2, and group 2 is the 65 through here, the 72, and then the 80 there, now that it's in the 65. So it'll be interesting to see what happens there. And also too, this being a wave 4, this is a wave 4 here of 1 lesser degree, which is also staying within the into the 365 there. So it should sort of settle in there. USB BHP open higher and close lower. But it's reasonably sort of steady there. So we'll see how this goes. But that sharp move down through there normally would it's selling there. So it's going to retest that supply again through there. So we'll just give that a little bit of time to unfold. But a wave 4 can be a bit complicated, so sideways and so forth. So let's just allow to see what sort of happens there. But yeah, just to let you know that there is a correction sort of happening here, and we know that anyway because this is the beginning of the trend, the building side of it. This is where all the volume comes in, when everybody recognises that it's making new highs and so forth, and then the series of waves through 4 and 5 through here, this 4 and this 5 and this 4 and this 5 are the ending parts of the structure, which are really just a reverse picture of waves 1 and 2 and 1 and 2 here. So in one way or another, you know that yes, it's going to edge higher. Corrections will be shallow, they will be sideways and complicated, but it will be sort of just edging higher a little bit. So that's basically what we expect there. The oil market is much the same. There's in the bigger picture, we're looking for it to move up. The only thing that can occur is we can see a move down through here first before we see another move to the upside there. We may get lucky, and this may just stay within this under the 96 here, within that trend line, and then move to this point here as well, because the 96 here has been retested, right, and then sat on there as support. So that's good support. But the 96.50, as I mentioned before, is a very important number, as you can see, but it hasn't actually been tested as support. So I've just put those little trend lines in there. They can be handy at times. So, but it is the 96.50 there that is being tested as support. So it's a matter of seeing if that holds first. If that does hold, then you can start moving back in. If once 97 becomes the support, then you can start scaling in there and moving to the upside. Oil will follow stock, and also taking consideration what the US dollar is doing. So this would be moving in line with the gold, silver, copper, and while the US dollar is starting to retest off the 79.50. So as I mentioned, the sort of 97.50, so the 97.72 will be an important line in the sand for the US dollar. So you can be long or short above or below that for the commodities. Okay, let's have a look at currencies. Okay, the US dollar here first, and this is essentially what we're looking at here. We're looking at wave 3 low through here, and that can be completed now, and we'll drill in and have a closer look at that. For the wave 4 there, the 38.2 retracement level comes in from the top of wave 2 roughly to here, so that will come in at the 81 there. That's what would be expecting at that point, but it doesn't. This is the thing with working with large numbers. That 81 is the supply area, so that's a logical place for it to go back to. And there hasn't been a lot of activity. The 80 hasn't really sort of come into play just yet, so it could certainly go back up there. But normally, when you're sort of looking for retracements, then they tend to be sort of shallower because the larger number will end up holding it there. So yeah, just looking at this little sort of structure through here, I guess in here is this last sort of 5 waves down from here is the 1, the 2, the 3, the 4, and the 5 coming down through here. And then in this 5th wave here, there'll be 5 waves, which we've got the 1, the 2, the 3, the 4, the 5 down through here, and looking for the other retest back up into that area there. So just dragging it down into 20 minutes here, because just want to point out something, that if this is the low here, if at 70, oh, I've got it wrong before, didn't I? At 79.50, then if I was going to retest the 80 back from here, then we'd need to see support on the 79.72 here, and it's fine for it to push up there, have a type of correction through here, and then move back up through here, and then find support. So if this moves up through here, then the commodities are going to be weaker, and the US dollar, the indices can also be weaker as well. So it is really a nice point to work with. But first of all, this can come back down here somewhat first before it pushes up there. But support above that number there will put pressure on the indices. So that's just a good little point to keep an eye on. If this does push up through here, then the euro's got a top in it, and then the Australian dollar's got a top as well to some degree. So looking at the euro here first, in the bigger picture here, for the euro, we're looking at a top of a little wave 3 here, or the same wave 3 as below, basically. Just I've got these labeled a bit differently, but so a wave 3 here and a wave 4 to come back in through here, but we're still looking for a larger picture to unfold to the upside there. But and of course, coming into 130 as well, you'd expect a reaction within there as well. So yeah, that's what we're sort of looking at there. So just drilling down into that further, which we have been looking for the other days. The counting 5 waves up through here, so it's the wave 4 that we're looking for back through here. But I seem to have an extra wave in the euro rather than the US dollar. So what the way that I'm handling that, and the way that I've mentioned this morning, if the 129 becomes support here, then we'll see a push to the 130, and then that will give us the top of the 3rd wave. But it was because we've got this spike here. It's just maybe it's included, maybe it's not. But the 128 would be the support for any small wave 4 to come back in here, and then a wave 5 up through to here. So in terms of trading, we really want to drill down into that 129 area through there, and this. Looking at the 1 hour chart here, we were counting the 5 waves up from the 125. So we've got our little 5 waves here for wave 1, wave 2, and then we're looking for our 3rd wave up, which is into here, the 4th wave to here. And over the last few days, we've been looking at this structure coming through here, a series of 1, 2, 1, 2, 3, 4, 5 here for this one, the 1, 2, 3, 4, 5, and then we've got this one here, which is probably, this spike here makes it a little bit difficult to figure out here. So just that's the other push to the upside that I'm just a little bit unsure about, and that's why I'm mentioning that if the 129 develops as support, then you need to trade long. But in looking at that as well, just looking into the 5-minute chart here, then would be looking for swings here. So this can be the A, the B, and the C down to this point through here. Not that it matters at all though, but if support is found on top of the 129 there, which it hasn't got at the moment, if it gets up there and tests it a couple of times, then you can start looking at building in the trade at 120, 129.10, and then exit at 30, and then wait for 30 to become the support that stage. If it becomes support, then trade up to the 129 and continue to 129.50 and hold it up through there. So yeah, it's just a game of support and resistance, game of snakes and ladders, and yeah, so not too difficult. The Australian dollar has moved up to the 105. The 105 is, I'll just look at the bigger picture here for a moment. The 105 is important because it's the halfway mark between the 10 and the $1. So for me, if support is found on the 105, and not just the trade above it, but actually come back and test it, if the testing is done and it's got support, then we can look up to these levels, in fact making new highs above our triangle high coming back way over yonder here. Okay, so because we have been in a large triangle pattern here, which we're going to talk about in a second. So this is our little triangle pattern through here, and we're looking, a triangle pattern is 5 waves, the A, the B, the C, the D, and the E here. We were expecting it to come down a little bit further, and it may do. I'll talk about that in a moment. But what I'm talking about, if it breaks, once this triangle's finished, we'll make new highs above here. So what is important, if the 105 becomes the support, you will know that that's the catalyst for the long trades at that stage there. So bear that in mind. What we're up against in the meantime, though, is working out what's going to be happening here. And with this wave 4 here, wave E from D down to E here, should be in 3 waves. Now, the situation we've got is that, yes, this move down here is in 3 waves, and that could be the E wave. So we could put that E there and also the wave 4 there as well, and then we'll be looking for 5 waves up here, 3 waves back, 5 waves up, 3 waves back for climbing higher through there. So that 105 would be the line in the sand at that stage. However, until that 105 becomes the support, then we'd have to consider that the E wave is not finished, and this little A, B, C here would be just the A wave. This would be, it could be the A, the B, and the C for the B wave here, and then down for the C wave here, and then moving up from there. So bottom line is we don't know, so we just need to be patient, and we need to work with the smaller wave structures in the marketplace. So with that in mind, then we can look at the move up. The move up that we've been looking at on the 2-hour chart here is up for 1, back for 2, the 3rd wave, the 4th, and the 5th here. So after a 5-wave structure, which is an impulse wave, then we get an ABC correction. The ABC correction can come back, even if it is an A wave or wave. This could be wave 1 up here, or the part of the B wave. So in either case, it can come back after 5 waves. It can come back 61.8, which is back to the 103 there. So we need to bear that in mind as well. We'll be able to work that out once we see the structures start to move from that point there. If it is going to the upside, then we'll see this 5 waves up. We'll see a small A, B, and C back to here. And you would think that because the most of the volume was traded in this area here, the 104 area here would be roughly where it would come back to. So let's just drill in here a little bit closer. Not that we need to count this structure up anymore. You pretty much know that. We'll be having a look at this little 5-wave structure here just for the time being here. So we've got, this is our 5-wave. This is the wave 3, the wave 4, and the wave 5 that we've been tracking up here, the 1, the 2. This is the little 3rd wave here all the way up to here for the 3rd, the 4th, and the 5th here. So we have started the correction here. Okay, so we've started the reaction here. This is the arrival. This is the reaction. So it's looking for support, and we'd expect this to to unwind a little bit further through here for this. So this would be the first wave down as wave 1, or the A wave, the B wave coming back, and we'd look for this to come lower through here. So yeah, let's just sort of see how that goes. And also the other main point too is getting past the meeting tomorrow at 4 a.m. the FOMC meeting from the Feds. That's obviously going to spike the price as well in either direction. So just be a little bit careful about that. But I do want to just come back here. If we've got a bullish picture here, we would be looking for the textbook would be the A wave here, then the B wave here, and then the C wave coming back in anywhere between the 50 and the 60 here would be the norm, but it doesn't have to come back that far. It may just come back this far as well. That's what we'll work out. Once we know what this leg is, then we'll know what this one and this one is here. If this does push up here because of the meeting, because it's in a bullish pattern, then we'll do the same pattern, but we'll be doing it from just a little bit higher through here, such like that. So then we'll be working with the 105 through here, and we'll be looking for the first high above the level, then an A and a B and a C. So whichever way it goes, it doesn't really matter. But once it's completed, and if we've got this 5 waves here, then we'll be looking for another 5 waves to the upside. So we've got time. You're not going to miss anything. So don't get sort of caught up in the Fed's meeting, and well, certainly don't overtrade anyway. And just allow this to play out through here, this ABC here, and then we'll be able to catch the next trend up. So we'll be looking for another 5 waves up, roughly the same size as this one here, if not adding another 60% on this one as well. So there will be a good trade coming. We just need the pattern to fall into place first for the setup, and then we'll use the levels to go from there. So you won't be missing anything, but just start getting prepared for a good move up. So, alrighty, well, that's it. So markets are reasonably quiet because of that meeting. So it's a really good idea not to overtrade. If you've got a lot of longs in the market, then having a short in the market as a bit of a hedge, it's not such a bad idea. Try to get a couple yesterday. So they're just really little hedges, but the trend is up, and we'll stay with that. It just depends what happens in this meeting. Okay, good morning and good luck.